Hi everyone, I think we're live. And so I'd like to welcome everyone here to this webinar presented by Crystal and BCB. I'm Ashley Pope and I'm your host today. I'm going to be guiding you through the discussion with our two super special guests, Tash Powell and Jordan Alexander. Our main topics of discussion today will be the current crypto landscape, market developments, including the SEC's approval of the ETPs, and other topics like MiCA and the travel rule. First, a little bit about us. I can kick off. So I'm Ashley Pope. I'm Chief Product Officer here at BCB. I look after all of our fiat payment account connectivity, business accounts, rail connectivity, instant payment network, which is called Blink, crypto capabilities as well, including payments and custody, and finally FX trading across both fiat and crypto. Previously, I built a number of different products from zero to one in crypto, including a crypto payments and custody platform, a blockchain analytics platform, DeFi wallet as well. Was working in smart cities for a while and had a stint developing a rugged mobile telephone. Also spent a bit of time in the legal field right at the start of my career. I was also in a DJ group touring the world, and I played Glastonbury a couple of times and released a couple of records on Sony Universal. That's me in a bit of a nutshell. I'm just going to pass over to Tash for her intro now as well.
Thanks, Ash. Whenever Ash gives his intro and he throws down his, I was an international DJ that launched records, etc., etc. I'm always like, we should have them in the background playing as your soundtrack, Ash. Hi, guys. I am Tash Powell. I have the pleasure of being Chief Compliance Officer for BCB Group. I have been at the firm for just over 18 months now, and I split my compliance and risk responsibilities really between our payments entity in the UK and our FX entity in the UK and our crypto trading and custody entity in Switzerland. So lots of different issues to juggle from a compliance perspective across those three business lines. Before BCB, I've had a long old, pretty traumatic career over the last 20 years in compliance, working first at the FCA, doing policy and working on European directives, which is really, really good fun. And then moving to Barclays Capital in the end of the sort of 2005 to 10 era, where lots of fun and naughty business was going down that the compliance teams and regulators had to get their arms around. Then I took some time away and trained as a chef because I was so determined to leave behind compliance and finance, but got lured back in and went to work at RBS, where I did institutional, wholesale, corporate, and lastly, retail compliance, which brought in a whole new world of considerations, which fast forward 15 years, I'm really glad that I do, because looking at any product from the end consumer, how it impacts the client at the end of the chain is always really, really useful, particularly in a world like crypto, where we're dealing with retail customers who don't necessarily understand all the risks, don't understand the pros and the cons of certain platforms or products, and are interested and have money to spend, but don't know how to do it safely. After RBS, I worked in private practice and was doing consultancy with a number of hedge funds, prime brokerages, corporate finance, and then ended up in the wonderful world of crypto and digital assets, working alongside Ash.
Thank you, Tash. Jordan.
Yes, hi guys. So my name's Jordan. I'm the Director of Product at Crystal. I recently joined Crystal about a year ago. This is actually my very first webinar, so it's a first for me. My experience, well, firstly, Crystal Blockchain, what we're doing is we're helping financial institutions innovate in the crypto space by mitigating many risks, primarily compliance-related risks, and those concerning anti-money laundering. My responsibilities are helping the teams, deliver new functionality that enable us to offer solutions to innovators in the space. We are an intelligence company, so we don't just help with anti-money laundering related risks, but we've got intelligence on many other kind of illicit activities going on in the space. Previously, I've worked in cybersecurity. I built a privacy browser with 50 million monthly active users. I've been in crypto since 2016 when I built my first mining rig, mining Ethereum. And I am the founder and chief strategy officer of a crypto native hedge fund called Agrippa Capital, and also an infrastructure provider providing validation and collating services in a non-custodial way for many different chains, and also a founder of a DAO called Pankasila, where we build metaverse scaling technologies. So I'm hoping to contribute to this conversation on the technological side, what technology we're seeing, how we can help teams to understand compliance-related risks and any other kind of risks that we're seeing emergent in 2024. So yeah, great to be here with you guys and looking forward to an interesting conversation. Passing back to Ash.
Excellent. Thanks, Jordan. So Crypto OG. Nice to have one on the line. So bit of housekeeping before we start. So we'll have an open discussion for about 35 minutes. And then we're going to open a Q&A towards the end. So please feel free to post your questions in the chat as we go along. And then after that, once we finish the discussion, we will be able to have a look back at the questions and answer them and discuss them further. So I'm taking a bit of a deep breath because 2022, end of 2023, were pretty mental in crypto terms, to say the least. And crypto itself is probably more mental than the standard financial institutional area. And kind of given the fact that we've just gone through this crazy, almost housekeeping, cleaning metamorphosis in crypto, there is a ways to go, clearly, but we have come a long way. And we've got to the point now where ETPs have been approved by the SEC. What are you both feeling around this approval, and what kind of impact do you see this having on regulatory frameworks globally?
Listen, I think that's a really important question. And when I talk to my fellow compliance officers and other forums right now who are involved in the crypto space, there is a palpable sense of, we've been gearing up to this. This is what we are here for. For the last 2 years, compliance teams within crypto firms, crypto development firms, crypto exchanges, crypto payments firms have been trying their hardest to put in place sound practices, things that make sense, things that they know are going to keep their business, their founders and their clients safe. But they've been doing it in a vacuum. And the frustration that many of us have had is we're all trying to work towards a safer marketplace for these crypto goods and services, which doesn't nuke the agility of the product itself, which doesn't limit it or restrict it from needing to be continually developing and evolving, but that makes what we're doing real from a appropriateness perspective for goods that are ultimately going to be sold into the marketplace. And we do it in a vacuum because there's no regulatory guidance. The events of 2022 led to the regulatory noise that has been 2023, with multiple regulators in multiple regions trying to get their arms around problems like FTX, problems like fluid prices, problems like how do you restrict access, protect data, make sure people are safe when there's no common ground between a lot of these products. And what we saw in 2023 was, one, the sort of the turn in the tide of the feel in the US, where actually crypto became a very, very difficult place to the US became a very, very difficult place to do business. With the fall of Silvergate and Signature, it became very, very hard for crypto firms to have appropriate banking in the US. And many of us who have survived the sort of the headwinds of the last 2 years are still playing catch up to try and fill that space and to try and get access to appropriate payment solutions. In Europe, in the EU, we've seen almost a steady drip of what the future might look like as more and more details come through around MiCA and DORA. And in the UK, we've been battling a regulator who is now going on multiple prongs or multiple attacks of it needs to protect consumers, so it's going to introduce financial promotions rules for crypto companies. It needs to be seen to be keeping pace with MiCA in the EU, so it's making noise around stable coins. It needs to keep up with travel rule compliance, so it's introducing new rules. So it has been a barrage of levers being pulled and moved around us without a framework that all of this regulation sits in, which hopefully MiCA in Europe will provide. As we move into 2024, with MiCA so clearly on the horizon now, we've got a 12-month run into effective date. It does feel like the regulators are coming to the party, and it does feel like we're now getting to the nitty-gritty heart of the conversation around what appropriate regulation should look like and feel like. Those firms who are lucky enough to have public policy teams, who are lucky enough to have lobbyists acting within them, have been really active out with lawmakers and regulators, seeing if they can shape that. Those of us who are less fortunate are doing our best from the sidelines to influence those conversations. I think there is still an opportunity to influence those conversations as we go into 2024. But definitely my perspective is where we're starting this year is going to be very different from how we end it. And finally, I will have a legitimate set of regulatory guidance to hang my inherent principles that I conduct our business with on already.
Thanks, Tash. I guess I've got a more of a slightly personal question. Have you noticed a difference in approach or feeling around crypto amongst your peers that maybe aren't in crypto yet, or are dabbling in traditional finance?
No is the answer. And I think that if I'm being honest, that's just the compliance officer's purview. I wouldn't expect the compliance officers who sit in mainstream retail banks or mainstream even investment banks where they're not active in crypto digital assets to have taken a view on this yet. So no, there is no more, you're getting the big guns are coming your way, you're going to get regulated and you're going to be working alongside us. What I do see though is BCB as a payment service firm is obviously very, very involved in the banking landscape. We work with multiple banking partners in the UK, Europe, and now in the US. And what I do feel from the relationships I have with those banks is they are opening their doors. They are looking for us to mature. They are looking for the crypto industry to mature into a creature and a beast that they can absorb. They are looking for us to come to the party with appropriate compliance frameworks, appropriate monitoring frameworks, appropriate Q&A frameworks, appropriate controls in place. And the sooner that we can do that, and we can do that in a homogenous way, which is why the regulation is so important, the easier the opportunity becomes for us to go mainstream.
And Jordan, I guess I've got a question looking at this a bit more from the crypto side. What has been the feeling just from your contacts and the community in general that you've seen around the approval of the ETFs? Has it been positive, negative, neutral? Be good to get your view.
Yeah, so I think it's changed because so from Crystal's perspective, it's definitely a good thing because we want to see the industry that we're in developing and maturing, and you can view the SEC's decision to permit the ETP of Bitcoin as a signaling of the maturity of our industry and the legitimization of crypto assets. And I think it's like a movement towards blurring the lines between crypto and traditional financial markets. But in essence, it should mean that crypto is maturing. It's a safer place for investors. And if we look at the market and financial institutions who were probably on the fence about whether they get involved in crypto or not, hopefully they view this decision from the SEC as a maturity of this market, and they're more open to begin participating and connecting with the ecosystem. So from that perspective, it's very good. The investor community, though, sees the events of the past few weeks slightly differently. It was viewed as very much a bullish event. People were hoping to see prices continuously climb, but it worked out in a different way. So some of my friends who are traders are a little bit disappointed in the price action that followed. But in terms of like builders, financial institutions, this is definitely a good thing, and it's being viewed positively.
I think that's really interesting that there's been sort of reticence in the marketplace that the price hasn't done more. Actually, I look at it from the other perspective, which is slow and steady wins the race here, guys. And it as long as the trajectory is still overall positive, then we are doing what we said we are doing. We are providing viable investment products to the wider market where the risks that they are taking are manageable, rather than, okay, suddenly it happens and the market goes crazy and everything goes up and down because there was a post on social media following on from an announcement from the SEC, which was taken up then taken down. What we need to do is build long-term resilience into what we're doing, as opposed to social media responsive day-to-day, minute-to-minute price peaks and troughs. Because if we do that, then however attractive the returns may be, it will scare off the institutional investors.
So just thinking more about, and we'll get into the actual kind of changes or modifications or similarities with compliance requirements across crypto fiat a bit later on. But I just wanted to ask you a question, Jordan, around the capabilities of Crystal. You mentioned obviously it's a blockchain analytics tool. Crypto started off as Bitcoin. We've now progressed to different types of protocols, different layers, different use cases. So as crypto and blockchain evolves and progresses over the next 1, 2, 3, 4, 5 years, have you seen demand for other types of products and services or use cases from your clients that go above and beyond transaction monitoring? Perhaps DeFi protocol tracking, the trade tracking, etc. Be great to see where the demand is coming from your clients and prospects, for those kinds of analytics and intelligence services.
Yeah, absolutely. So, beginning, the typical customer profile would have been an exchange, somebody who is receiving deposits in kind in crypto and needs to know the story behind the transaction. Where's the deposit come from? Has it any connection to dark marketplaces or sanctioned addresses? As the markets evolved and you now have intersections with DeFi protocols, a transaction has a much more complicated history that you need to analyze. And you mentioned there DeFi. If you can imagine a coin that's now been deposited into a VAS, where's that coin been? Well, it used to have just transacted across one network, possibly Ethereum, but now you have, like you say, all these additional chains. It can travel cross-chain, it can enter a liquidity pool, it can be swapped from Ethereum to US dollar Tether and then to 50 other coins before it reaches the VAS. So the analytical capabilities that are now required to build that picture and ascertain whether it's safe for a VASP to receive that deposit and that it hasn't come from an illicit source or marketplace, then it's a lot more complicated. So yeah, the customer profiles that are emerging are those that require more in-depth analysis and a greater degree of accuracy when determining the riskiness of receiving a deposit or transaction. So yeah, we're also seeing more demand from regulators themselves. So it used to just be VASPs themselves, but now a regulator, a government's interested in understanding the activity from within their jurisdiction, and sourcing that intelligence is a challenge for authorities that don't have the blockchain pedigree. So we're seeing this emerging profile as well from regulators and authorities too. And the use cases there are slightly different. It's more kind of broader intelligence on the factors concerning their geographies that they oversee. It's an interesting question, Ash. Yeah.
I mean, Tash and Jordan, how do you feel the travel rule will play into the transaction monitoring and source of funds checks, just generally? Do you feel that that will help to reduce the amount of fraud and illicit activity on the blockchain as we move to more of a system and more distributed transactions that are appropriated to particular individuals or firms? Do you think that will help? Do you think there'll be a duality?
I think that data is always king if you're trying to spot or understand any illicit behavior. Where I think we're at with this is actually crypto again is just catching up to fiat. So when you send or receive fiat payments, you exchange details about who you're receiving money from and who you're sending the money to. And that is now what is becoming obligatory in the crypto and digital asset space. So is it going to be helpful for some firms to catch some types of behavior by having that data? Yes. Will it eradicate money laundering and terrorist finance and the problems that underpin all of these regulatory initiatives? No, it won't. There are always ways and means around those things. It is not going to be the answer to financial crime fighting heroes' goals. But will it help? Yes. Will it help with screening? Yes. Will it help firms understand and determine better their risk appetite in relation to where they are sending funds, whom they are receiving funds from? Does it help them ultimately understand the activity that's going across their platforms better? Yes. The question that I think is really important to ask is at what cost? Because the practical and operational impact of implementing travel rule is very, very onerous. Now, people in the TradFi space would say, welcome to the party, guys. It's not easy being part of a financial services industry. It comes with responsibility. And I have, having spent 20 odd years working in TradFi, I have a lot of sympathy with that. It's like, you don't get to make money, sell money, take money without having to pull your weight in terms of the responsibilities that you're carrying. I just wonder whether the real problem with the travel rule is not the travel rule itself, but the way that it has been implemented with the lack of homogeny across all the different regions that we are now having to try and meet travel rule compliance with. And again, I would say to the industry, just give it time. Regulators have to start, and I say this as an ex-regulator, regulators have to start somewhere. They might not get it right day one. It might be difficult to implement day one. But if this market is going to be here, if it's going to survive, then we have to embrace the regulation. We have to work with our regulators. We have to test the regulation, find the holes in the regulation, find the problems with the regulation, and then go through the iteration of telling the regulators why they need to change it. And it is just that maturity life cycle that I think many people in crypto just don't have the patience with, because that's not what crypto was devised for. That's not what crypto is here for. But it is just part of the world that we and the wider financial ecosystem that we exist in.
Do you think there's a case for a common trusted identity if we kind of fast forward the whole kind of crypto space, let's say 5 years, and we think about the idea of a common identity that can be issued in multiple locations globally that can be trusted, I can then use to transact with. Do you think that that's a natural next step at some point, Jordan?
Yeah, I think so. It's a really difficult place to get to. I think there are some interesting projects in the space that are emerging. Vitalik's also quite keen on this as well. And yeah, it's a really beautiful vision. So this is the idea that we can have on-chain attestation about, someone's credibility and trustworthiness, and these, smart contracts make it possible to program and basically just, confirm on-chain that an address is trustworthy, it's compliant, and it can be trusted by many VASPs and basically everyone in the ecosystem. But getting to that point is going to be tricky, because you have all of these different geographies, and you need to kind of get everyone to converge on accepting that one thing. So in essence, yeah, it's a beautiful vision. It would make things very simple and easy, and I think it would strike the right balance, because when I think about doing KYC and the process you have to go through to become verified and trusted, is you sharing lots of information about yourself, your address and so on. With a decentralized identity, if you could create the process for achieving that status in a way that is maybe leveraging zero knowledge proofs, or protecting the data sharing of an individual, we can also achieve a lot in terms of data protection and maintaining a level of privacy. And if you think about people in crypto, that's something that's very concerning to them as well. So it's not just helping VASP be more compliant, but it's also addressing a core need and desire of participants, like core contributors in the ecosystem and everybody. So yeah, I think
Honestly, it's ideas like this which make me so grateful that I was brave enough to step away from TradFi and move into CeFi DeFi space, because the path to righteousness is never easy. Yes, it is going to be hard to get to that nirvana state of which you describe, Ash, but that is the future, and that is the way to take these old, outdated methods that we use for KYC and KYB and make them into real dynamic, almost foolproof mechanisms by which to move the whole marketplace forward. But it's got to be done in chunks. Now, if one of the joys of working at BCB is working with Ash and working with his giant brain, and the conversations that we will regularly have around product development. And I will say, oh, but we've got to do this, and we've got to bake into the flow this, and I've got to check this, and my team will have to review that. And he's like, but there could be a different way. And he'll start talking about the different way, and he'll see the sort of the sparkle in my eye. And I know that one day the great compliance minds, the great product minds, the great crypto minds will come together, and we will solve for these problems. We just have to keep going to get there, and not to be rigid in our thinking. And that's one of whenever I'm asked to speak on panels regarding, what makes a good crypto compliance officer, or why would you move to crypto compliance from TradFi, it's the willingness to be agile in your thinking, do something different, know that there are different ways to create risk management opportunities, and lean into the spirit and the ethos of crypto and digital assets, and not be wedded to, well, in 1975, they came up with a method of KYC, and that's how we have to do it. No, we're done with that. The future is brighter, and I think as long as this this world and this ecosystem exists, we're going to be pushing in the right direction to change things and make things easier.
Thanks both. Switching gears a little bit, do you feel that crypto compliance and the threats that crypto poses differ from traditional finance? Tash?
In some ways, it's much easier to be a crypto compliance officer than it is to be a TradFi compliance officer because of companies like Crystal. You can see where things have been, you can see where things are going. You have more information about any given transaction or movement of funds than you would in the fiat space, 100%. Do I think the risks are different? I think the risks are right now bigger because of the lack of regulatory oversight, which means there are still people out there who aren't playing in the swim lanes, who aren't looking to do the right thing, who are just looking to make money fast and quickly and don't have the right either protocols, resilience, control framework, oversight, understanding. And it's weeding out either the bad actors from that who aren't going to get this right, or the people who just don't know what they're doing enough to be able to protect the market from them. So I think that the overall risk in this industry is bigger. I think also than just the very nature of cross-border movement of funds means that crypto is exposed to a faster pace, a need for faster paced risk management than you would be in TradFi, where it still takes T+1, T+2, T+3 settlement times. I always pause for thought over sort of anonymity and the legitimate use case for privacy coins, the legitimate use case for bridges and mixers. It's almost a sort of moral debate now on whether they are a help or a hindrance to the program. Ultimately, I think that it is easier to move money faster and quicker online and in crypto than it is in fiat. So I think the risk profile that our firms face is still higher.
Cool. So thinking about an all-star crypto compliance team, Tash, what do you think the components for this would be?
So when I joined BCB, I had not worked in the digital asset sector before. And I was like, oh, am I going to be able to do this? Because, you know, how much do I really know? And I joined a firm where, one, there are some incredibly bright people. Two, there are some very, very generous people who have shared and demonstrated such knowledge and depth and willingness to give out their IP and their knowledge that it has been a much easier learning journey than I thought. But the thing that really made me stick in the team that I am in is that I have on my team some crypto native experts, guys who are 10 years younger than me, 15 years younger than me, who grew up in the evolution of crypto. And I know 100% I couldn't run my team without them there. But if it was only them there, if they had not spent time fighting regulators, fighting bad apples within their firm, fighting multiple complex regulatory landscapes in multiple jurisdictions because they had just been sitting doing their crypto knowledge, then my team wouldn't work. So for me, a Crypto All-Stars team is a mix of people who've come from and have weathered the storms of TradFi, who know what works in TradFi and what doesn't work in TradFi, and know how to take risk in TradFi. Because for me, particularly if you're in a startup scale-up environment, the key thing is to find compliance officers who don't just say no. Because if you just say no, your business will not grow, and ultimately your business will fail. What you have to do is find the reason to say yes. And that is look at the risk and understand the risk. So I can see the risk in a transaction. I need my crypto experts to help me understand the risk and to help me mitigate that risk. Once I can find a control which is going to help me mitigate that risk, I can then be empowered to make a risk-based decision to say yes. So for me, that all-star cast is some people who know those products inside and out. some incredibly analytical brains who can look at a pattern of transactions and pull together the pieces. Some risk experts who know what good risk feels like and what negative risk feels like. And then some people who know how to manage their regulators. If I could also add into my dream team, the public policy people that I referenced at the beginning, who can then be out there influencing and making sure that when the regulators are putting pen to paper, they are doing so in an informed and educated way, then I would include those in my team.
Thinking about the processes and systems side of things, Tash, on that side of things, do things differ between traditional finance and crypto, or are you the same?
Process, no. Process is process. And this is the biggest advice I would give to any crypto compliance team. Make sure that your house, your framework, your compliance framework looks and feels like a TradFi one to the outside world. Because when you go into the regulator, when you go into your banking partners, you have to be able to pitch to them something that they see and understand. So there needs to be a risk appetite. There needs to be KRIs, which demonstrate how you're adhering to the risk appetite. There needs to be transaction monitoring, KYC onboarding, ongoing monitoring, quality control, quality assurance. You need to have MI for reporting. You need to have your SARS escalation and reporting processes in place. You need to be dip testing. You need to be doing all the things in your compliance program within your crypto firm, whether it be a payments firm, an exchange, a trading desk, that you would expect to see in the TradFi world. What makes you different is the systems you use. And that's where crypto compliance then takes the edge. And that's where the conversations with the likes of Jordan and Crystal become really, really important, because those are the ones that can help us get further. A standard fiat TradFi transaction monitoring system, it's nothing compared to sort of the engines behind the crypto compliance transaction monitoring systems. And when you can marry the two up, so you can get a holistic picture of how fiat and crypto world risk combines, then you're on a winning streak.
And thinking about the other tools that could be used as well, or are used in compliance to augment client data pack that's used when you're making decisions, and the introduction of AI, do you see that as being beneficial? You know, kind of being able to combine data and scrutinize data in different ways that maybe humans couldn't necessarily think or would get to as easily or as quickly. Do you see AI playing a role in being able to make quicker and faster and better decisions?
Yes, absolutely. So yeah, I think you hit the nail on the head, which is humans, we're typically limited by our attention and our time, whereas artificial intelligence can operate at a speed much quicker than we can in sifting through data. And the beautiful thing about blockchains is that, you know, they are essentially just distributed databases. And you know, Crystal, what we're doing is we're leveraging artificial intelligence to monitor on-chain data. And the benefit of that is that we can detect risks and threats in real time. So to give you an example, let's take just an everyday hack, and these are happening all the time in crypto. You know, not a month passes by when we don't hear about a protocol or an exchange that hasn't had an incident. Now, those funds have been stolen, and then, you know, the end goal of the hacker is to liquidate them and receive fiat or some other type of crypto. So they will transact and transfer funds to a new exchange. So a human intelligence analyst analyzing the hack and the flow of funds, he needs all these different tools that he uses. Whereas an artificial intelligence that's monitoring that data can basically follow the flow of funds in real time, provide an alert to an exchange that is going to receive those stolen funds, and hopefully freeze them. Or so we're seeing the advantages of artificial intelligence within the compliance space, definitely. But I will caveat this by saying, on the other side of things, Ash and Tash, we see threats as well, because artificial intelligence in the wrong hands can be used for negative consequences too, like looking for bugs and exploitable opportunities in code to give the opportunity to hack an exchange or hack a smart contract. AI can be used to impersonate somebody with a deep fake. So there's pros and cons to this technology and its usefulness in both combating illicit activities, but also, you know, being their friend as well. What do you guys think about the subject?
You're on mute, Tash.
I was saying some really bright, insightful things there. No, I think that's a really good point, Jordan. I really do. And again, it's not just looking at the compliance framework from how do we do KYC, how do we do onboarding, how do we do transaction monitoring. It is also looking at it from operational resilience and protecting our business and cybersecurity and making sure that whatever our crypto business is doing, it realizes that the customer base is smarter, sharper, more aggressive than probably those that you standardly see in fiat. So the tools that we have working with us can also work against us. How do we combat not just a traditional money mule system, but sort of deep expert cyber fraudsters who are coming to get us? It's great challenges.
Yeah, and I guess kind of to your point, Jordan, around combating AI, if you reverse the AI that you illustrated that could follow a transaction and work out where it could potentially be from and the probability of it being potentially darknet or illicit, you could then reverse that as a criminal, and you could basically create an AI that constructs a set of transactions that tries to obfuscate to another AI where the source of funds was from, right? So I guess it does actually become quite interesting and quite challenging quite quickly.
Am I naive to think that that's not just a crypto problem? I mean, that could also happen in TradFi as well, if you're using AI tool and your transaction monitoring in TradFi.
Yes, but you can participate in mixers and in tumblers and in DeFi protocols programmatically in crypto. Whereas in traditional finance, you have to open an account. It takes a bit of time, right? You've got a lot of compliance gates in between all those accounts.
So Ash, what I think when I hear you speak of such risks is 2024 is an exciting year because we have regulators who are coming to the party who are going to put down regulatory frameworks which are enabled us to look, address, and deal with these risks in a homogenized way. It forces crypto firms to be responsible. And if you are not willing to be responsible in this place, you need to get out of the industry, because you will bring us all down around you, and bad actors ruin our reputation.
That is definitely true. So, final question on that note to both of you, before we go to the Q&A from the listeners. How are you both feeling about the future of crypto? Jordan?
I'm excited. I'm glad that regulation is here. I think, building on the conversation, our industry is maturing. It's taken us a long time to get to this point, but finally, there was this saying, I remember when I first got into crypto, it was kind of like a joke. It was a meme. It was, at first they laugh at us, and then they ignore us, and then they join us. And we're, I think, in that latter stage, which is, we've believed in these technologies for a very long time, and the benefits that they have to traditional financial markets. And finally, I think with regulation in place, we have a safe environment, or a safer environment, to begin welcoming traditional economic actors to our amazing technology, and I'm really privileged to be able to play a role at Crystal in making it a safer environment and helping them manage those risks.
I would say that I think that the future of crypto is inspiring. There is so much movement, there is so much change, there's so much evolution, there's so much development. As you referenced at the beginning of the call, Ash, 18 months, 2 years in crypto is a lifetime in TradFi. So, what we'll see happen as one regulation solidifies and to the market responds to it is, just huge amounts of development, change, progress, and hopefully positive dialogue. I would couch that in just be patient, guys. You can't, you know, if you the hare and the tortoise wins the race. And whilst I don't want to slow us down, I want us to be cognizant that the regulators will never move at the same pace as us, and we cannot go too far ahead of them, otherwise we will lose their trust. So the regulation will come, we will work with it, we will, as I said at the beginning, we will test it, we will find the holes, we will go again. But over the course of the next 18 to 36 months, we will start to turn the corner of providing a sort of certainly a more stable marketplace for crypto assets.
Excellent. I am of the opinion personally that we are in a really great place. I think we'll continue to evolve. I agree with you, Tash and Jordan. I think we are at the place where we've come out of the woods. Traditional finance is beginning to join us. Regulators are coming to the party, which is great. And I think the only way is up now, to be totally frank. And I think that a lot of use cases that crypto OGs really were aware of, understood, and lots of use cases that hadn't been uncovered yet are all converging now and making the whole of crypto much more relevant and useful just for companies and for individuals all around the world. So now I'm going to move to the listener Q&A. We've got a few questions that have come in. The first one is from Nirvana Lazik. And it is, what is the general view of direct deposits to VASPs from mixers such as Wasabi? I'm going to ask Tash that question first.
My personal opinion is at BCB we work with a huge number of different exchanges who have a varying different products and services on their platforms. From my perspective, it's not for me to comment on the different use cases that people may have for using mixers, bridges, and privacy tokens and coins. From my perspective, the key thing is that if a VASP is going to accept direct deposits from those types of services, that it has a really robust risk mitigation strategy in place. So it understands what it's doing when it receives those. It understands why people are making deposits from those types of services, and it can counter the risks attached to it. Ways you might do that: deeper levels of monitoring, restrictions on the amounts, restrictions on the user set that you are willing to accept deposits from via those services. If you can find a way to minimize the risk that comes from that channel, then the channel becomes safer. If you are going to accept deposits from such services, then just be really, really ready to answer the question as to why and how you're comfortable doing it.
Thanks, Tash. Question for Jordan, again from Nirvana. Have you come across any VASPs that ask for a magical solution when it comes to suspicious deposit detection on chains that don't have a lot of attribution?
I think that we have seen requests from similar requests before, yeah. Typically, we have a very broad coverage at Crystal, so we cover, over 300 or so different networks and chains, and we have varying different degrees at which we can analyze a transaction. We separate them into 3 different levels. So, the first level is just typically recognizing where the transaction has come from. And then we have deeper levels of integration where you could start to build, clearer visualizations of that transaction and where it's been and what it's interacted with. So we do tend to get these, niche requests for, chain XYZ that very few people have heard of. It happens. I think that the way in which we help VASPs deal with that is we give them a set of customizable risk screening tools, which enable them to determine how they perceive that deposit from that chain, to what degree do they perceive that as risky or not? So they can decide whether receiving a deposit from chain XYZ should be deemed to be risky. Crystal, we have the broadest coverage, and the likelihood that we don't have this weird chain covered and in our system is going to be slim. But yeah, it happens, and it's down to you to decide whether it should be deemed as risky or not.
Question from Rajesh Laka again for you, Jordan. What kind of skills does a crypto compliance product manager / owner need?
Great question. I think it is, you need to have an understanding of the risks that are out there, the technologies, are we talking about a product owner managing the development of these systems, or somebody on the compliance side of things? How do you interpret?
I think managing the systems.
Okay. Yeah, I think just good understanding of the technology, trends in the industry, and a deep understanding of the personas in which are using the systems. So for example, compliance officers and compliance teams, it's really important to understand their needs, the threats that they're faced with, collect lots of data as well. So when you're developing these systems, it's important to understand like where the illicit activities are happening, what are the big trends in terms of emerging threats, so that we can make prioritization around what we're delivering to the market. And I think now, going back to the conversation that we had, the power that artificial intelligence can have if we leverage it correctly, I think this year it's going to be very important to have a skill set in understanding how to leverage artificial intelligence for the purposes of mitigating compliance and other risks in crypto. It's a good question.
Yeah, definitely. Thanks for the answer, Jordan. Another question from an anonymous attendee, which you kind of touched on the answer on as we just been discussing earlier. What advice do you have for compliance officers in terms of future-proofing their strategies, and should they future-proof?
Yeah, I mean, look, I think you have to. And the way that I do is it's really through data and MI. So if I know what products my business is supporting at the moment, I know how they're performing, I know what my client base looks like, I know where my client base is, I know my risk appetite, then I know the risks that I'm exposed to. The more information I have about the risks, the more capable I will be to build an environment to support those risks. So I think when it comes to your compliance strategy, making sure you're not operating in the dark, you know what you're doing now and where your business plans to be in the next 3, 6, 12-month period means that you can always look ahead. So I know right now that I have the right size team to manage the compliance risks that I'm juggling right now. I know that in 12 months' time, I won't have the right size team, but I know that in 6 months' time, I'm going to bring in a new system, which is going to mitigate the need for more people. And it's constantly juggling the understanding what your critical risk point is now, the volume of risk that you're dealing with, and how you're going to mitigate that risk. But I think if you don't have an eye on the future, you'll get caught out, because there's nothing worse, and I've seen it multiple times, than finding yourself in a position where your compliance team is on the back foot. Because if the compliance team is on the back foot, then you can't onboard customers quickly. You can't approve new products quickly because you're caught up in remediation of past sins. So your compliance team has to grow in line with your business, and their capabilities and tolerances have to keep pace too.
Thanks, Tash. We're getting close to time now. One for Jordan from Jay Cartwright. Do you see high street banks incorporating DeFi wallets into their apps like Revolut has done? And I'll add another question as well on that. Have you seen any demand for your services in relation to that kind of functionality as well?
Oh, great question. So The answer is I would love to see high street and retail banks integrating DeFi products into their applications. I think that we still, the regulators need to, decide on what regulation needs to be in place in order for that to happen, because, DeFi, there's a lot of lending and borrowing going on. There's a lot of existing lending and borrowing laws that, could be extended to cover it. So I think there's a regulation piece that you guys are probably well placed to answer there. But in terms of product perspective, I think that if there is a retail bank or, an application that has a skilled enough team to build a really DeFi friendly experience, then yes. But where I sit currently, I think DeFi has come a long way in the past 1 or 2 years, but it's still really not at, a user-friendly experience whereby my mum or, an elderly relative could interact with it. I think what's more likely to happen is a really clever team is going to blur the lines between, the application experience whereby they're interacting with DeFi on the back end, but the user experience is obfuscated, and what they see in their account is just, regular fiat transactions. I think Revolut is making headway here already. It's already possible to buy and sell some crypto inside a Revolut application, but DeFi offers, much more interesting use cases than just buying assets. Like, we didn't talk about today, there's a whole topic around tokenization, and DeFi is just such an interesting subject, and the marriage with, traditional retail banks is beautiful, but there's a lot of things that I think present challenges for that to happen. And then what was the latter part of the question? Sorry, Ash, I got carried away.
Do you know what? I forgot it. I think you've answered all of it.
I'm just drawn in by the beauty of the marriage between the banks and the DeFi. I think that was a really fun marriage.
But I'm with you, Jordan. I think that when it comes to the utilization of DeFi within retail or corporate banking, I think because it's so nascent right now, it's so hard to get in. It's all the use case and the benefit of it maybe isn't as obvious or easy to interact with. And once you abstract that away into a simple UI or a simple API, and the use case or the outcome is more yield or higher liquidity, and you kind of think about abstracted benefits, that's when you can start kind of really scaling the usability and the benefits of DeFi to a much wider audience. I think we're at time now. I want to say thank you both for your time. This has been an absolutely fantastic discussion. Thanks to everyone for listening. Thank you to Crystal for hosting. Please feel free to reach out to all of us on LinkedIn. And I'd like to wish everyone a happy rest of the day.
Thank you.
Thank you very much.
Thanks, guys.
Thank you, guys. Bye.